Hey everybody, welcome to video 21. I am going to try this one take thing again. It worked really well for me last time. Let's see if I can do it again this time. Today I really want to touch on very quickly, should be a short video, about single pay mortgage insurance. Now this idea came to me because I recently had a client who came to me and said, I'm thinking about either a cash out refinance or just selling my house and purchasing a new one, but I don't know which one's going to be most advantageous for me. And so we started to talk about the differences in cash out refinances versus just buying or selling your property just on the market. And so when we got down to it, it was a matter of, well, how much money am I going to get out of the property, and or in the cash out refinance situation, how much money am I going to have to leave in the property? Well, as you guys know, or probably know, if you do a cash out refinance, you have to have 20% of the deal, or 20% of the value left in the property. In other words, I can only lend up to 80% of the value of that property as a mortgage loan, cash out refinance. That also includes any first liens that are there already. So if you have a $50,000 balance and your house is worth $100,000, then the most additional funds you can have is $30,000, which would be 80%. So if you're looking to, in his case, he was trying to pay down some debt, and so he's trying to get this certain number that he's looking for. And I said, well, if you sell your house, it may take a little bit longer to get the equity. However, you could get more equity out, and then you could do a loan that was 5% down or 10% down and not have to leave that 20% in the property. And he said, well, won't I pay mortgage insurance on my monthly payment? And I said, yes. However, there are some circumstances where a single pay at closing premium for mortgage insurance makes sense, and this would be one of them. Now, you'd have to get the numbers and look at the numbers, because if you listen to my mortgage insurance video from a little while back, you'll understand that some loans, FHA loans, have mortgage insurance on there forever. Conventional loans, there is a certain loan to value that it can come to where you can get that mortgage insurance to come off. So depending on which loan program you went with would depend on how much money you were going to spend on mortgage insurance through your monthly payment and how much more a month that was going to cost you. But there are some circumstances where you can pay a single premium at closing for the whole bit of your mortgage insurance. In other words, instead of paying it as a fifth part of your payment, remember you've got principal, interest, taxes, and insurance, and if you put down less than 20%, you've also got that mortgage insurance piece of your monthly payment. Instead of having that fifth piece, you can pay a lump sum one time and then not have that on your monthly payment. So in his case, we'd have to get the numbers just right, and there's no sense. I tried to do some numbers, but every time there was so many different variables, but it'll be a case-by-case basis. And I'm happy to do that for you if you have a situation like this and you think, I've got enough equity in my property that I think I might want to get it out, but I don't know if I want to cash out refinance. I've got to have this certain number. I can help you run that analysis, but instead of trying to do a big example for you with lots of math, just know that in some cases it makes sense. Sometimes it doesn't. So if you're going to put down 5% or 3% on a conventional loan, like we can do, then it may not make sense, because that mortgage insurance premium, that one-time premium, is going to be pretty large. If you're going to put down 10% or 15%, then that mortgage insurance premium may be small enough that you say, you know what, it's worth an extra X amount of dollars to pay at closing to not have mortgage insurance on my monthly payment. So just something that I thought of, something that came up this week. Guys, I'm sorry I didn't get a video out yesterday. We went to the great IKEA. It is just so overwhelming to go there. I don't know if you've ever been there, but sometimes it's like, I don't even know what's happening. There's so many colors, and then I've got to go to aisle 36, bin 15, and all this stuff. Anyway, it was a mess, but I was there yesterday, and then we had an event last night so I couldn't get a video out to you guys. Sorry about that. I'm going to try to keep doing these periodically since it's been about 30 days. Today is the 19th. Tomorrow will be 30 full days, a full month of me doing these videos. I know I'm only on 21 videos, but we had, like I said last time, we had some Labor Day weekend. I messed that up again. Labor Day weekend was in there, and then all the weekends, of course, I give it to my family, and so I didn't do videos there, except for the one that my son did, and everybody loved that. So if you are liking these videos, please let me know if you want me to keep doing them. If you like the once-a-day deal, or if you think once a week would be okay, once a month, just let me know kind of what you're feeling. Also, if you have any topics, I would love to address those for you so that I can be relevant and that this can provide some value, which is the whole whole point of these videos. So if I can help you out with your mortgage needs, as always, reach out to me. Love to help you. You can contact me on any of the social media outlets that I'll post this on. Also, leave some comments and questions below. Would love to interact with you. Have a great day, guys, and we'll talk soon.